We're snorting cap rates and shooting up cash flow here at Deal Junkies.
Welcome back, Deal Junkies. We had a busy Friday last week, so we scheduled podcasts on Monday, got one in, and Trevor and I are getting a second one in so that you guys can hear our voices on Thursday, as always. We wanted to make sure to not miss any, so it's just Trevor and I today, but hopefully we can get some good content out. I kind of like the two-person podcasts, more intimate.
We'll see. So today, I'm going to interview Dane. And we're going to talk about what we do because we realized we talk a lot about what other people do, interviewing them, and you may not realize what we do or who we are. So we did this a long time ago, like 2.5 years ago, on one of our first podcast episodes with Dane, but you didn't own much real estate at that point. So we want to give you guys an update. So to introduce Dane, Dane is the Chief Investment Officer at Stack Asset Group and founder. Dane became a millionaire by 25. Mm-hmm. You're 26.
About to be 27.
About to be 27. Dane at 26 built an $18 million apartment complex, acquired a few hundred units now since that first episode. So I wanted to go through, like, how do you go from where you were at to now? So starting with your background and how you got into real estate, just to give people a refresher.
Yeah.
What made you want to start building apartments? Because when I met you, you'd never built anything, and you wanted to build something, and we had the goal of building 100 units.
Yeah.
So what got you going on all of that?
I mean, I think you're just the sum of your surroundings, and I kind of just got lucky with the people who I met with early on, both for jobs that I had, like in college, and I talked about this a little bit on the episode way back when, but I didn't realize how much that like formed my thesis around investing, I guess, and how much that aimed me towards what I really wanted to do.
Who were those people? They were apartment investors?
Yeah, apartment investors at the time. And so I worked for that property management company, and he had a partner who had built projects, and I just looked at like where they were both at side by side, and the guy who had built projects had really done like nothing different. He had just decided when he was selling something, he would roll it into land and try to develop the land, like 1 out of 4 deals. And so it was guys who just bought houses down in Corvallis, and then one of them would roll it into like a 1970s small apartment complex or 10 units or whatever, and the other one would develop. And the guy that was developing, like, just by and large, in the same amount of time, pretty much the same time period, they went to college together, he had like exploded. And so, and the guy that I worked for though said that he never did it because it was way too risky. He was like, there's no reason to do it, super high risk. And I think that it was good, the timing that I heard all of that too, because it was while I was getting my finance degree. And the biggest thing that I probably got from my finance degree was not learning anything about math, but it was understanding risk and how people perceive risk, and then like what risk really is.
So you probably agreed with them on the front end about like, it's risk. Way riskier to develop this, but has your opinion changed now that you've been developing stuff?
Oh, totally. But the reason that it changed, and it didn't change in the sense that like, it didn't change in the sense that I knew I wanted to get to the point where I was developing apartments, like you talked about. Like when we first met and we were just like sitting at a coffee shop brainstorming what like Trevor and Dane Incorporated was going to come, and then like what Vesta was going to become, and then like what Stack was going to become. It evolved over time, but the whole time like we wanted to build apartments. Or like I was at least pushing you to build apartments because you already had such a strong portfolio of value add, and value add deals were actually easier at the time, I think, when you had started buying them. And so, I mean, all deals were easier, I guess, but that was just your bread and butter. And you knew how to structure deals, and you didn't really have a desire to build because it was like, why would I distract myself? I can go buy 10 deals that are already built in the same time it takes me to figure out how to build one, right? And so the thing that changed wasn't necessarily like my desire to build. It was that I knew that in a value add deal, there are like 10 things that could go wrong. like say there's 10 unknowns to it. And in a development deal, there's 100 unknowns. And so the people that win in development aren't the ones that get lucky. They're the ones that get much, much, much better at defining what each of those unknowns are.
Yeah, because I think on a heavy value add deal, you actually have more risk than a construction deal because you have a higher chance of your budget being off because there are unknowns within that once you start tearing it apart.
Walls. Yeah.
Yeah, and you might not account for those, and then you might end up just rebuilding the whole thing for the same cost of going ground up on it, but you paid top dollar for it.
Yeah.
But okay, so you got into that, and you saw them doing that, you worked at Dutch Bros, you had a bed bug company, and you were doing some odd jobs, and then you wanted to get into real estate, so you became a broker, and you were doing commercial leases or
started out like industrial and office leases. I was doing small office leases. I did 2 my first year. Like I said, like I've said many times, the first year that I was in real estate, I made just under $2,000, and I probably worked 1,600 hours would be my guess. I don't think I worked a full 2,000 because I would like split which Fridays I worked. But I probably worked 1,600 hours.
While working a job in addition to that.
While working at Dutch Bros, yeah.
To actually make money.
Correct, because I needed to pay rent to one of my buddies who I'm actually seeing tonight. But so I made about $1 an hour my first year in real estate, which like was disheartening, but I think that I was consuming so much content and also spending so much time around like you and Gabe and I guess not really Mark at the time in the first year, but just around people that were constantly encouraging instead of talking to people. I mean, frankly, like my parents weren't discouraging. I have like the most encouraging parents of all time. Genuinely, like they've always, anything I've decided I was going to do, they were gung-ho for. And in the first year, it was just like, yeah, it's going to be hard for sure. Like my dad's in sales, he gets it. I don't think he understood the difference between selling life insurance policies necessarily and like building a commercial broker team or building just like a network of people where you can broker commercial deals, I guess is the way to put it. And so I was like a year into it, didn't make any money, and he knew. I mean, he would ask, just checking in, how are things going? And it's like, well, there was never like got a big check today. And there was a point where he was like, okay, have you thought about like doing anything else? Like he wasn't trying to like tell me to do something else. I think he was just genuinely concerned. Like maybe this isn't your thing for whatever reason.
So why weren't you making money doing it, working 1,600 hours?
Well, I wasn't trying to make money. I mean, I think that was probably my biggest issue was that I had my emergency fund built up. I was making money from Dutch Bros, and my goal was to build as many like strong relationships as I could. Like I've never been very good at the transacting side of real estate. I'm still not. Like my goal was to build strong relationships with people who would want to do deals with me in the future and who I would want to do deals with like for a long time. And so meeting with like Gabe or seeing Kurt Arthur at the time, who like he just had people call him, and it was like, well, I've gone to lunch with that guy once a month for the last 20 years. Yeah. So it's like that's why that guy calls me when it's time, because 1, I have all the knowledge, 2, we're good friends. And it was like, okay, so I just have to learn as much as I can early on, because I think that's a step that people like skip.
You add no value when
you add no value. You're just a middleman trying to like make fire out of it, and it's like you don't already have the fire created. Like you can't just put something in there and get it burning. It's like, no, I can add you into what I already have going if it fits my pipeline or my buy box.
You knew you wanted to own real estate, and you were at a brokerage who was all about selling and leasing real estate. Yeah. So you met me and Gabe, and then you moved over when I was brokering too to SMI because you were like, this is a better fit to own real estate. Yeah. And then me and you try to broker apartments together, but we're trying to do big apartment deals. Yeah. And again, like we're not adding value at that point. And we pivoted the business model to doing real estate consulting for everyone that owned less than us at that point. Yeah. And well, I guess to take a step back, so like before you came over, you met with us and you wanted to do deals. We talked about doing deals, and then we went and put that 10 unit together that you found. and that was your first deal you did before you had a credit card.
Yeah.
So before you bought a house, before you bought a car, before you bought all this stuff on any credit, didn't have a credit card, you bought a 10 unit apartment complex.
Yeah, we bought 3 deals before I had a credit card, I believe. I think that we had bought the 10-plex, and then we bought the house down in Albany, and then we bought Hermiston. And then I was buying the 4-plex from you guys, and James was James called me, and I was in Tacoma at the time. Yeah, I was trying to get a house hack, so I needed an owner-occupied loan, which I was like, I had never needed credit for an owner-occupied loan because I had never occupied anything I bought. And James was like, hey, weird question. He's our lender. He's like, do you have a credit card? And I was like, sorta. Like, I have my parents, but like, it's not like I don't use it. It's just for like emergency stuff if I need it. And he was like, you've never gotten a credit. I was like, I didn't think I needed one. I don't know. Like, I had never thought about it, I guess. So I did get a credit card. I have a few now, unfortunately, and I have good credit though. So I went straight for buying deals before I did any of like the conventional route.
Yeah, and then as we were trying to broker stuff, we realized, because I was in the same boat as you, of building up passive income, didn't have to work anymore.
Yeah.
Blew all my money and then realized I had to work some more if I wanted to keep
goodness.
scaling and doing deals.
Yeah.
So we started doing this consulting / brokerage thing where we're helping people build and scale their real estate portfolio.
Mm-hmm.
And I owned, I don't know how many, 100 or 200 maybe by the time we were doing that.
Mm-hmm.
And we were just helping people who owned less, like, get in the game, basically. Or we were taking people who maybe had 20, 30 units. How do you double this type of thing? So you go from making no money to we're both making the most active income we've ever made at that point.
Yeah. That was your brainchild, frankly. Vesta was, at least. I feel like, we both on the front end kind of knew high level that was going to be the place where we could create the most value, because we both spun our reels so much trying to broker commercial deals, and those deals just weren't working at the time because it was after interest rates had already hiked. And I think that's like, it's important to note that maybe we would have been good at commercial brokering had we done
brokered commercial deals.
Yeah, we still brokered a few commercial deals.
That's
true.
A deep, like, between what we bought ourselves that we brokered and then what we brokered third party, we were still brokering more than.
That's true. Yeah, we were probably brokering 15 or 20 million still in 23 or in 22 and 23. That's true. We did 25 million in 23.
Yeah.
But no, it just seemed more repeatable, I guess. That was the clear thing on my end, is that we could build out a system, and then you just built out the whole system for Vesta. Obviously, I helped with it. We both kind of had our roles in it. You fixed a bunch of bottlenecks. I came in and fixed a bottleneck at the end there, which was that we were really good at the consulting side, but then not so good at just like actually closing deals for people. And so I was working on Stack full time, right? And so for clarity there, like, we started Vesta, which was our consulting company. Trevor was running that. You were doing a webinar every week, weren't you? For like, how long do you think?
A year.
So, yeah, like 52 webinars. He'd hop on and be like 5 o'clock. One person would show up, still give the webinar every single time. I was not envious of it, frankly. I was pretty stoked you were the one doing it. Then I did start doing webinars, and they're fun once you get comfortable with it. The first couple are awful because you have like no idea how to like navigate talking to people. But at that time, he was running all the webinars. He was handling all the front end client stuff, and then I was running Stack. Basically, it was just me running the company that 4 of us spend.
Yeah, and what is Stack for people listening?
Yeah, so Stack Asset Group is the company that Trevor, Mark, Gabe, and I started to buy all of our assets. And very quickly, my goal with Stack was to end up building things, but really just to tie ourselves to Mark, which was why it's because you, me, and Gabe were already buying deals together. And then the first deal we bought, you guys had offered me 25% ownership in it, and it was already structured. You guys had the money for it, and so I said, hey, I'm going to bring Mark in on this because I actually think he'd be super helpful. And that was the first deal that we all did together. And that's where we formed Stack Asset Group.
And what was your idea of what Stack would do at the beginning versus what we do now?
Oh, man. The idea at the beginning was probably much more financial engineering than we do now. I mean, we still structure deals non-conventionally, conventionally. Like,
what is financial engineering?
Financial engineering is just looking at your capital stack and saying, like, okay, here's what my debt is. Here's the best debt that I can get, or maybe it's not the best debt given the equity that I can get, and just figuring out how you can make your capital stack as optimized as possible, mostly for us. And if it's as optimized as possible for us, and we can actually get the money for it on the equity and debt side, then everybody's happy.
Yeah, it's how do you make a deal pencil when a seller wants too high of a price?
That's a lot of it.
And you can't just buy it all cash or conventionally and have it work for your metrics. So it's leaving them in a deal as a partner. Can you bring on more debt? Can you have cheaper debt? Whatever it may be to play with the numbers to make a pencil on the time frame.
I think it is important to note that it's not necessarily just that.
Yeah.
That's where we use it most frequently, but it can just be like, hey, how are we phasing this project out? Like, am I putting a lien on the entirety of the whole project and then only building one part of it out? Or am I putting a lien on a different project that I own and then building this whole project out? And once I refinance that, paying off the loan over here. And so it's just like, it's going outside of just, I'm going to get a first position deed and put 35% down on it.
Yeah.
Like, it's finding the way to make the deal work when, it might not otherwise based on just a conventional purchase.
Yeah. So you were thinking, because that's kind of what we were doing. We were just trying to figure out how to do creative deals at the beginning. Yeah. So it was kind of the idea we would do a lot of that to start.
Yeah. I thought that's all that's all I was really calling on.
Yeah. And then how did that change into what?
It evolved like pretty naturally because we just saw it. We saw that like people's desire to get into real estate from Vesta and the consulting company, where it was like, okay, I want to do an owner occupied 1 to 4 unit. But then we just had all these clients who didn't want to owner occupy a property, and really that was the best way you could make a deal work in like 23 and 24 was an owner occupied deal. And so all the people that had money but didn't want to owner occupy because they had 2 kids
or didn't want to manage the deal.
Or just any of the large list of reasons, or just like couldn't buy a big enough project to make it make sense.
Yeah, like they have $100,000 and they don't want a duplex because it didn't pencil, or whatever reason they don't want to deal with the value add, and then they end up offering you money for your deals.
Well, it wasn't even necessarily that as much as it was like we would just have people be like, "Hey, I have $100,000. I want to put it into real estate. What do I do?" And then the best option ended up being like, "Well, actually, we can just give you a really good return, most of the time better than just if you were going to buy a duplex or a fourplex on them." And you can't buy a fourplex with $100,000 in Oregon anyways. If you can buy a fourplex with $100,000 and not occupy it, you should buy that deal in Oregon. Yeah, that means it's underpriced.
Not anywhere in Oregon.
Yeah, that's true. Sorry. Good clarification.
Because you can definitely buy some.
You could lose on a $400,000 fourplex. Yeah, that is true. No, but I mean, it just naturally transitioned from, we're going to do creative deals where the seller's the only one who can participate. Because I think we realized that like all of the sellers, otherwise they wouldn't have done it, that we were working with on like the financial engineering or creative deal structures were super happy with the outcome. So it was like, okay, how can we get more people involved in our deals, basically? Because our bread and butter is from like close to refinance, basically. And the front end is just like building out, okay, how do we get the deal in our name, essentially? Mm-hmm. And so on like ground up stuff, it's like, no, we have a niche there. Like we do 3-story woody walk up as good as anybody does. And now there's a lot of people leaving, and part of like our competitive advantage now is that not only can we get the most competitive pricing and like build in the most efficient manner fast on woody walk up, but we also have the front end structures already built out. And so then our back end, like refinance, we're in a better position than somebody else might be who just knows how to do one piece of the deal.
Yeah, it's hard to do all the pieces of it.
It's really hard. You probably have multiple partners.
So what would you say Stack is today then?
Stack is, I mean, it's just a real estate investment company, like to not overcomplicate it. If that would be my high level, like if I was to give a quick, like, what do you do to the NAICS, like the business code, I'd just say we're a real estate investment company. Deeper than that, we buy and build apartment complexes. And I think that every time that we've tried to go out of that lane, we've spent 2 weeks just kind of spinning our wheels until we realize like there's a reason that all we do is buy and build apartments. Because we just have such a competitive advantage that it's hard to, you might not remember it every day on like a day-to-day basis. Like when you underwrite a deal, it's like it just all makes sense to you now. And like when I look at a development deal, it's like it's going to take me 5 minutes to know that it probably won't work, and then or less, and then it's going to take me 20 minutes to articulate to somebody else why it won't work. And so you kind of forget how long that used to take. Because used to, if I was looking at a development project, it was like, I don't even know where I'm supposed to start. Like there's 100 risk factors, and I don't know how to price in all of these things. Like I don't know what it costs to do the dirt work on a 2-acre lot. Like I don't know what it costs to do the framing on a 66 unit.
Or even the zoning at the front end.
Yeah.
What can you build and why should you build it?
Yeah.
And people today that are developers still don't do that. Because like projects you look at, right?
Yeah.
Like probably 80% of the projects don't even work that are already developed and have this specific use. And you're like, why? This doesn't make sense. Like, I don't know how you're going to get there. You're going to build it for more than it's worth. So unless you want to put a ton of money into it, but you might as well at that point then just buy something.
Yeah. No, I think that the biggest mistake that somebody could make would be to do their first have their first construction project be over a 20-unit apartment complex and get architecture and engineering plans finished before consulting with somebody who has done projects like that over and over again. And I don't know how you could not just like call even if you weren't trying to get a partner, like just calling somebody and asking like, hey, call us. Like we'll give you our opinion pretty quickly on a project. Like get the pre-app done, sure. And that's what you're, so the difference between like having a pre-app meeting and getting a project entitled where the city's like, hey, as long as you do XYZ, then like you can build 50 units on this piece of land. So then you go to somebody and you're like, hey, I need plans for this. I can build 50 units here. And then you have to say, okay, should I build 50 units here and why? And don't just take it through the design phase without, consulting with somebody. Because to your point, like there's so many projects right now that have like fully engineered drawings done, like ready for permits, and they just don't pencil.
Yeah, they bought land for 500, spent another 300, 500, and then it's worth 500.
Yeah, it's
200,
or it's
worth zero.
Yeah, yeah. Or it's like I wouldn't build that if you gave me the land, like because I can't make money on it.
Yeah. So today you go from college kid working at Dutch Bros, own a few hundred units, building apartment complexes. We're looking at like 50 to 200 unit projects. Like these are projects, $5 to $50 million basically, like across the board. But you went and you traded off like making the most money you ever made when we were transacting something like $5 million a month or probably something like that as consultants and brokers. And then you take all that and then you pivot to going back to no active income because now you're starting a brand new business again and you have to go ground up. Like, what is that like?
I mean, you and I had just like agreed on the front end what our end goal was. I mean, that's the biggest thing for any set of business partners is don't say like what you want to do in the next year, and don't even say like, it's almost not even helpful to say like what you want to do in 5 years. It's like you have to figure out the character of the person that you're trying to partner with, because it's like, okay, why would I, like, why would I entangle myself with somebody who doesn't like fundamentally agree on all of the principles or things that I believe about real estate. And so like why I want to invest in real estate, why I want to buy apartments. Like it wasn't even necessarily we agreed on exactly how we wanted to do it. It was just like, this is the end game. We're both willing to forego income. We're always going to be the ones to give, not take in a relationship. And the same thing's true with Gabe and Mark. And that's why it was like such an easy fit. But when it came to getting rid of active income, it was like, the reason we were doing it wasn't because I didn't like active income. It was like, I'm foregoing what I said my original goal was. And you felt the same way. It was like, we both had a 30-minute phone. It wasn't even a long phone call. And I was like more emotional about it because I was the one in the middle of like hiring more brokers for the active, for Best at the time. And I felt super bad about it, but I knew that like neither of our hearts were going to be in it. And it was like, we just got to rip the Band-Aid. Like our goal of this was just to not even do it. The goal was to like have it run itself, not to actually run the thing day to day. Like we enjoyed help, and it was like fun to help other people get into investing in real estate. But at the end of the day, it was a means to an end of us owning more real estate.
So does that cause stress though, going from like you have a bunch of money and now you have runway, and now you have future money and you have money you're making on paper, like you're building equity in these properties, but you're not taking fees, you're not getting payouts till down the road. Like, how hard is that to do?
I mean, I don't think most people would really enjoy it. I think you and I both have like probably a naivety to us of just like, we can always make more money. Like we can, if it comes down to it, like we'll figure it out. And we both had money saved up too. And like we still had a little bit of recurring income for a while there. And then we had projects that we're going through, and we still have projects that are going through, but it takes time to build the pipeline back up because you're dropping the thing that's already running to like start a new, like get another thing put in motion. And so it took, 6 to 8 months to really like get anything moving. And that was, I don't even know that it was like stressful or scary. It was just like, this is what needs done. Like this is what gets us to where we want to go. And so if there's any way that I can financially make it, which of course we were going to, it's like, we'll just figure it out. But like end goal, buy and build apartments. Okay, we can figure out how to do the rest. And so it's like, take asset management fees, take acquisition fees, which is why all the companies that are doing what we're doing take those. And we don't even take them on the front end. Like we've reinvested all of our acquisition fees into our deals, which is probably ill-advised, but it was like, well, why would I don't need that right now. I'd rather have it be a deal.
I think the only way someone can do it, and the way to look at it, is you're passing up, like you're getting like $100,000 a month doing this active thing. You're like, okay, I can get like $1 million on the year. Like that's pretty cool. And I can keep growing skin on this. I'll have 2 and then 3. Mm-hmm. But then you look at the deals and you're like, oh, I do one deal and I personally get like 500 to $1 million on this deal. I don't get it right now.
Yeah.
But I have this equity within this deal that's growing, and then it starts cash flowing you and whatnot. And then if you look at like that trade-off, you're like, yeah, I'm going to trade 1 million of active for 5 million of equity. Like, of course, but then it's like, how do you bridge the gap in between? Because you still gotta eat and pay your utilities and all your stuff.
Yeah, I was gonna say, I don't think that most people would. I mean, that's why we're in the unique position that we got lucky that we got into it as early as we did, and that we didn't have 2 kids. Like, I mean, really, because I don't know how my like emotional, mental, whatever state is going to change when I do have kids. But I know that right now I'm going to be pedal to the metal until that does happen. Because it's like, I'm just supporting me, and I know that I'm low stress. And I actually, like, the things that stress me out in life aren't when something's going bad for me. It's like if something's going bad for somebody else, like, and I'm part of that problem. And so in the future, if it's like, I don't want to be concerned about money then, I want to like have the money stress now, if anything, so that later I don't have to deal with that.
And another side note, so because you're 26 and you're doing all these big deals, you have your name on millions of dollars worth of real estate, you're building your net worth up, like how do you get people to trust you at a young age when you're talking to them about raising money or doing deals or development? And especially on the front end when you haven't developed yet.
That's
like,
such a good question. Because I you spend the first years of brokerage and like just in commercial real estate trying to figure out the best way to get people to trust you. And the best way to get people to trust you is to give them undeniable evidence that you're correct about something. And that's what you do when you underwrite value add apartments. That's what you do when you underwrite the stabilization of our ground up projects. That's what I like to think that I would do on our new development projects. And so like I've spent so much time, and I think people on the front end, when they're getting into it, just want to transact so badly. And so having the end goal in mind is so important, because it's like, okay, who do I have to become to be that guy? And what do I have to know? And what do I have to like walk like, talk like, act like, in order to be the person that like would own 1,000 doors, or that would own 2,000, or whatever it is. Like, I don't know what everybody's goal is, but I knew what my goal was. And then it was like, man alive, I better know more than everybody, because I'm young. And so I have to know even more than all the older guys. Like, because when I sit down in the room, not only do I not have the experience, but I'm 26. And so I better know more about the current code. I better know more about what's coming with the code. I better know exactly what the pipeline is for whatever city we're talking about. Like, I better know what that's why I know what population growth is in all the cities that we look at. It's like, I spend time reading about it. And when you're sitting there at your computer and you're reading about population growth in like Boardman, Oregon, or in like Springfield, Oregon, and you realize that population growth in Springfield, as an example, was 0.4% on average from 2010 to 2020. And then over the last 5 years, though, it's been one of the highest in the state, because Providence just moved over there. They did a huge build out in 2021. And it's like, okay, why does that matter? I have no idea until it does. And it's like, that's how I've gotten people to trust. Like, that's how I think I got you guys to trust me, was because you realized that I was just going to put all the effort that I had into actually knowing the things that mattered on projects. And so then when somebody comes and tries to talk to me about the vacancy rate, and I talk about this all the time, but like vacancy rate in a city, or like population growth, because vacancy rate is fueled by population growth and the pipeline for new developments. And so like getting people to trust you is just a metric of like, why should they trust you? Like, that's the whole thing. It's like, I don't want somebody to trust me just for my sake. Like, I want them to trust me because they should trust me. And so it's like, I'm going to prove to you why you should trust me. Go fact check everything that I just said, and then we can talk about it more later.
Yeah. And so how do you get people to trust you as you're raising money for these deals too? And what was it like at the beginning? Because it was really hard, right? Mm-hmm. And it took a long, like we have the problem of, we have too many deals, we can't raise enough money.
Yeah.
Now we have too much money, not enough deals. So
and we knew it was going to happen too. So that's not anybody's like fault, I guess.
So what problems were you facing at the beginning of that, and how did you overcome them?
Yeah, I mean, at the start I didn't have enough knowledge around how to raise money, really. Like, I knew real estate pretty well, but I would get on the phone and just be like talking about deals.
Did you feel like you were asking rather than giving?
Correct.
Okay.
That was the biggest thing. Yeah. I mean, that's the like by a landslide. Now when I talk to people about raising money on our projects, and we're in the position of like power control now, because it's like we hold as many shares in our projects as we want to. And if somebody comes to us and they have money, it's like, hey, if you want to put money into this project, we might have some shares for the next like 2 weeks. But I don't know if we will in like 2 weeks later, a month later. Yeah,
Hannah asked me the other day, she's like, does Dane like doing his job? I was like, yeah, I think so. He just talks to people all day. That's what he likes to do. And she's like, I could never do the fundraising part. Like, I could never go just ask people for money and whatnot. Mm-hmm. I'm like, well, you're thinking about it wrong. You're not asking, you're giving them opportunity. Like, so like what you're giving them is a good offer. Like, you want to invest in real estate, you can't on your own, you can't do these deals. Mm-hmm. How would you like to be completely passive, take on less risk by doing this because you're not signing on the debt, and then get more money than you would make in return? And I was like, that sounds pretty easy then if you say it like that.
Yeah.
And I think that's the pivot you had for
totally.
Like, it's like asking, like, please do this.
I was asking people.
Yeah, but it's like, no, this is an opportunity. Like, if you want to invest in it, like, what else are you going to do? Like, you don't have this option. Like, this doesn't exist in your network.
Yeah. There's people who I talked to at the start who I had like a pretty good relationship with at the time, one person specifically, who was like, I haven't made my money by like, just throwing money into things like this. And said person 2 years later is going to give us quite a bit of money. But it took 2 years of of us just putting content out, of me talking to them still monthly, regularly, building the relationship outside of anything money related, and then them seeing what the progress was, them seeing the projects that they didn't put money into finish. And then it's like, oh, okay. Now I'm not the one asking for money. They're the ones saying, hey, I'd actually really like it if you would take it. Can you guys do anything with my money? It's like, not right now, but maybe at some point soon. I'd love to.
Yeah. What have been the hardest parts of building a real estate investment company that you didn't realize at the beginning?
The investment company?
Yeah, because there's not a lot of people in your position who are your age doing it to this scale. And we're not doing it to the scale we want to. So like, I feel like we're behind always, but like from an outside perspective looking in, it's like, oh, that's crazy.
Yeah. No, we're not. I feel that too, which is the only way that we get to the point that we're at is by constantly feeling behind, and we're not. And so it's like a balance of reminding yourself that you're both in the spot that you want to be, but also still moving towards the thing that you say that you truly want. And I think the biggest challenge is getting in your own head about that side of it, and like losing the vision for the long term and foregoing it for the short term, like letting anything that's stressful on a day-to-day basis, or like anything that's small, because like neither of us have very high propensities to like feel stress, like, and that's just natural for whatever reason.
I don't think it's natural. I think it's built.
It's definitely built. It's built to
something. You go through the things that are stressful, or you force yourself to do things that are hard, so you can handle the stress. So I don't think it's.
I think it's a combination.
Yeah.
I think we've both and we probably built it partially like through sports, like just pushing through adversity in small ways throughout your entire childhood, like not quitting at things when it got slightly harder. And it's crazy to think that like genuinely that's probably helping us right now, and we just don't know it, but that just built up kind of the core of our personality. And it's certainly it's both, right? Like we both had some level of natural propensity and then just continue to build it over time. And so now it looks like, well, wow, like how do you even handle like that? You don't even have whatever this coming in, or you're slow on deals right now, or like how do you know you're going to fundraise with like 2 months to close a deal? It's like, I don't know. We just always figure it out. Like it's just we just don't quit things. Like we know we figure stuff out when it comes time to figure things out. And so I think the hardest part of building the company though is foregoing now for later, like really giving up more. Like I said, I mean, we're in like a way better spot than obviously we were last year or 2 years ago or 3 years ago. But it's like, well, it took you and me 5 years to, I guess 4.5 as of right now, to really get traction. And that was what it said. Like
that's an interesting point, because I've been doing this now. I'm getting close to 10 years.
Yeah.
Like I'm probably at like 8.5, maybe 8, somewhere in there.
Yeah.
But like you got to jumpstart it from your age, because you started even younger than I did. Yeah. Well,
I started younger than you. Yeah.
I started buying at 22. You started older buying stuff, but the scale you started at was much farther advanced than I was at that point. So like I've been doing this close to 10 years now in some capacity. Like I didn't imagine, like my goal was a house a year. Yeah. Like to start. Like now we're trying to buy all of the real estate.
Yeah.
But it's
What's been the hardest thing for you then?
The hardest thing for me right now, I think, is going from doing the smaller deals. There's way more you get to do, so you feel like you're doing more frequently. Yeah. So you could do multiple deals a month or one a month, and then also do Investo, where you're helping people do like 8 a month, right? Mm-hmm. So like you feel like you're doing a lot more, and now we're doing bigger deals. So if you're looking at like a $50 million deal, like we might do 3 deals, like the goal would be 3 deals on the year, but you feel like nothing's happening because you're doing so fewer deals. But it's way better to do that because those deals make more sense. It's less work also, but then you're like, what do I do in the meantime?
Yeah. No, that's such a good point. That probably is the hard part for me too, is like you have to spin your wheels, so to speak, on just more deals and shove away deals you could do, because anytime you say yes to the 10 unit, you're foregoing doing the 50 unit or 100 unit. It's like, because we only have the capacity to do so many. And so if we start putting, because the moment we're like, we'll do 10 unit deals, and then we just start putting, we've got 5 10-unit deals in our pipeline, and then a 100-unit deal pops in. It's like, we don't have the time bandwidth. Like, we can't do it right now. It's like, well, that's twice the size of your whole pipeline. Like, what you should drop 3 of these deals or all 5 just to do that one deal.
Yeah, because I drive down the street sometimes, I see stuff for sale on the market that's, smaller stuff. And I'm like, man, if I went right now, I could do like 5 deals today.
Yeah.
Like,
I could buy so many houses this month.
Like that's my biggest thing that is disappointing from going from like vested and active income is how many deals you got to be a part of to now like trying to do like 4 deals on the year, whatever. Maybe we're trying to do like, at first I thought we were gonna do like 1 a month of these smaller ones, and then build that up to like 3 a month. But that's like, oh no, I'd rather do a 50 to 200 unit deal 4 times rather than a bunch of 10 unit deals.
Yeah.
And that's the hardest part, because just knowing that I could do all those deals and like they make sense and there people aren't doing them, like anyone can.
That's the crazy part. Yeah.
Like that there's all these people who want to do it. I know how to do it. I have all this information. So that's why it was cool to help all those people go and do it. But then we just stopped doing that. So I feel like I'm doing less, even though we're doing way more in dollar volume.
Yeah.
But less transaction amounts.
Yeah. It is a weird feeling, because it feels like you need to be doing more, but then the moment that the big deal closes, you're like, oh, that's why. Like, that's why we did we closed one 4 months ago, and it still feels like we need to be doing, but it's like, well, technically we're on track. Like, if we close the deal that we're supposed to close next month, then, well, this month, I guess now, then it's like, okay, we're still doing the thing we said we were going to do. It just feels like it's way slower than it should be.
And the other thing is like the evolution of our skill set and buy box of what we're targeting, and then go into like, okay, there's all these deals on the market in the commercial space. None of them make sense that are like value. It's not heavy enough value, and you can't get the return on capital with the structures. Maybe it makes sense for someone else, but like pivoting to like building more is a change. And that's all, Mark, like having him as partner is valuable. Because like, I don't know how to build something. Like I could go hire third-party builders and stuff, but like we know once we have those numbers from him how to do the deal.
No, I think that it's, both of us are probably ready to like finally stop changing the thing that I think we're there now of, this is what we want to
start a new business every year.
Just like but the thing is, we had to do all of the other steps to learn and to get here, because like we couldn't have done it if we didn't have the active income. We couldn't have bought the deals that we did if we didn't have the money for it, and then we couldn't have met the people to raise the money for it if we hadn't done the consulting thing. It's like they were half of our money on one of our projects, so it's like you don't see it when you're doing it, but it's like, well, man, like we couldn't have just skipped to this step.
Do you ever think there should be a consulting component to what we do now, because there's so many people that we can't advise and help?
I think it's just shiny objects. Like, I think that there might be a point where we have it so built out and automated, so to speak, which like we're both doing with Claude right now, or I'm doing a lot of with Claude right now, like running in the background at all times, underwriting development projects, automatically continuing and like compressing its own files so that like an agent instead of just like one chat. So that essentially it can just do the development piece of my job. And obviously I have to review all of that stuff, and like it links to all the data that it pulled, but it's still, it saves 40 hours in a month. Like, so I get a week back. It's like, okay, how soon can I get like 2 weeks back? Like, how soon can I? And you still need a person who understands it to then review. I mean, it's like the senior coders at a software company. Like, they still have to review it, but all the junior guys that are actually writing lines of code, like, they're gone because they don't understand it as well as the senior guys. So they're reviewing everything, and they don't need the people that are just writing lines of code every day. And so I think that there's a time where maybe we build out so much of it that it's like, okay, we have enough bandwidth to help other people. But then at that point, it's like, is that really what we want to do with our extra time? Like, maybe we want to give back in a different way. Like, I don't know if it's going to be helping people buy deals. I don't know if it's going to be some sort of just like, we're part of Valor. Like, I don't know if it's going to be consulting to, who knows, like other businesses that are already successfully doing it, and just want help on that front. But I've thought about it. I don't think it makes sense right now. I think there's just more that we could be doing internally for now.
Yeah, it's just hard because I saw how we built that and then just stopped it, and it was on the trajectory
to really work.
Scale and working, and it's like we spent all the time, and then now we're changing to like a high ticket sales item, which is completely different. So it's a completely different business. It's all your marketing is completely different. All your offering is completely different.
So much of it is like, I mean, it's how good can you get a delayed gratification, basically. Like, that's what we've done over the past 4 years.
And that's what real estate is in general.
Totally.
Too.
And we've just tried to find like the peak of, and it's like, okay, how good can you get? Well, probably a 200 unit ground up apartment complex that you had to annex into the city out from outside the UGP that, had some slope to it, some wetland stuff. And, but you end up making X amount because you bought the land so cheap because nobody else would do that deal, but you had to see 4 years down the road. And it's like, yeah, that's probably it. Like, it's the most money you'll make on a deal. You'll hold that 200 unit for the rest of your life, but it took 4 years. And like people, like right now, if we started doing that deal, which I think those types of deals are what we're moving towards, I think we would all unanimously say now that type of deal makes sense. But you had to figure out how to make it make sense, and it just took a long time. But I'm excited about the current pipeline and also our current buy box, like what we've decided we were really going to do. And I don't see it changing a lot in the near future, at least.
It just spreads to other markets
geographically.
But that takes years to tap out.
We won't tap out for quite some time. So, well, I actually have to get out of here, but I had a lot of fun. I like being interviewed. We should do this more often. This was great. Deal Junkies, I hope that you also enjoy hearing me get interviewed. I had good fun. We'll have to do a Trevor interview soon. I tried to get a couple questions in there, but we appreciate you guys listening. Share this with your closest friend or one of your coworkers. Gabe loves you. I guess I love you too. And we'll see you next time.